Hello and welcome to Pro Trader Strategies Market Commentary for Monday, June the 10th. My name's Eric Wilkinson. Yep, some of you may recognize me as the Wolfman. I'm here to teach you guys some different option strategies that you can implement into your portfolios, but please do that in your own way. Also remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on. Across the pond, nothing really out of anything but Great Britain, but Great Britain came in with GDP coming in much lower than expected at negative 0.4%, expected to be a negative 0.1. And then we also got manufacturing production, which was a dismal 3.9% negative. And it was expected to be a negative 1.1, no revisions. The previous economic data point there. Construction output, negative 0.4, expected to be a positive 0.6. This is all out of Great Britain. Not looking too good. Industrial production out of Great Britain came in at negative 2.7%, expected to be negative 0.7%. So, geez, pretty bad economic data across the pond. Probably should make the equities start to rally, as we have been talking about this bizarro type of situation where we're in. The equities are going to try and rally ahead of any type of bad economic data because they feel that the Fed will start to lower interest rates based on a slowing economy. So that's going to drive equities higher. So keep that in mind. It's not always bad economic data means bad for the equities. Sometimes people are going to jump on that ahead of anything else. And then that's about it. We do have a JOLTS jobs opening, but nobody really looks at that. We already got our non-farm payroll yesterday, so we're not too concerned. It came in line with expectations anyway. All right. On to the overall markets. We've got nothing up. Hold on. Time out. Time in. All right, there we go. We've got our crude oil up now. It's coming off by about 32 cents. Again, we've talked about this till I'm probably blue in the face, at least at this point, it feels like, right? We can take a look at the chart here and pull it up. We've talked about the point of control right here driving the market and really making the market want to stay within kind of this area is what I'm looking at. Really the support being 50. I think we're going to see major support at $50 a barrel, even though there's nothing really lining up with it other than maybe my value area low and maybe slightly lower than that. It's more of a psychological level. You can see it's found those couple of spots before, but I think that we are going to see crude oil kind of stay within this range right here, at least until we see good economic data. Now, we were talking about the Fed lowering interest rates, that bad economic data driving the equities higher. We're not necessarily going to see that so much in crude oil. That's going to be a more supply and demand type thing that we're going to be watching, and we're seeing supply massively increase and demand kind of wane a little bit. So I think that this is going to be more of a function of the economic data than it is anything else, really. Gold coming off finally after a big rally, testing the value area high. We had to get a little overextended, I guess. I think the thing to test right now is going to be that we are going to look for this 1300 area. I think that 1300 is the psychological level. We are going to see support at 1322 though. That's going to be a support area. SP support, I guess. But we need to break below that in order for the market to get really kind of antsy back down to this 24 area. Again, flight to safety is what we're seeing here in gold. If the Fed starts lowering interest rate, it's going to be something that people are very concerned about, inflation and stuff like that, and that's going to be an inflation hedge. But I don't think that we're going to see inflation anytime soon, so these people might be a little bit overdone. I'm playing this still to the downside with GDXJ, which is just the junior gold miners that I'm playing to the downside there. All right, bonds down a point on the day, a full point. Really kind of stuck between these two Fibonacci's right here, the 50 and the 61. Major support and resistance in and around that area. This is basically the market trying to say we need to cut interest rates. All right, so it's basically yelling out to the FOMC, we need to cut the rate. All right, so that is what this drive has been about. talked about this a lot. I don't think that the Fed is going to cut rates. I think that they are going to leave them and let this kind of meld a little bit. So I don't see a rate cut coming in 2019 anyway. Let's just do it like that. 2019, I'm not seeing that happen right now. So I would play this to the downside, which I have. Been wrong on that directional move, but I'm still playing this to the downside, leaving it on with some long puts and short calls in there. Basically a risk reversal that I've legged into over time. The long puts are pretty much worthless. I sold the calls because I'm still under the assumption that the market is going to roll over here a little bit. All right, the VIX is coming off slightly, but we're still in the teens, which is a good thing. Here's the Dow Jones Industrial Average up about 187 points. One of the things I've talked about is, I don't think that we are going to see the momentum to get up to this area. I think that that is kind of out of the picture right now. I think that the market is going to extend up maybe a little bit, but I think that we're still going to roll over back down towards the point of control. So I think that the market has gotten this push to the upside. We played it correctly, but now I think that it's getting a little bit overdone here, and we're going to start, rolling over a little bit and heading back down towards that point of control. Maybe not going down and hitting it right away, but I think we'll start to see the market slowly trudge down that way. All right, the NASDAQ leading the market across the board. We've got Google up. When the government came out with sanctions on, or talking about sanctions with Facebook, Google, and a couple of the other ones, we've seen those guys actually rally up almost to those points. I'll pull up a chart here in a minute. But we've seen a lot of those guys really pull up to those levels. I'll just pull this one up right here. Let's just take a look at Google. Google, we can take a look at here. This is the gap I was talking about that the market, this was when we had the talks with the government. Now we're starting to get very close to covering that gap there. So we've got a gap that is looking to be covered on Google here. And we could probably take a look at Facebook. We'll see something very similar here. With Facebook, again, they've actually just covered their gap today. I was checking a look at it this morning, but covered this gap again right in this area that we've talked about. That gap has been filled. So we haven't seen that fill over there in the Google, but it looks like that's what really the market is trying to get accomplished here right now. So that's really driving the main reason why we got Google up, Apple up, Facebook. That's the major drivers of the NASDAQ, as you can see here, up 151 points on the day. All right, E-mini S&P is up 28 points. One thing to mention, we did see that the NASDAQ was lagging for a while there and overextending to the downside with some of the tech, and we talked about that when we saw the Dow Jones starting to rally, the E-mini S&P is rallying when the NASDAQ was struggling. Now that we're seeing some of those FANG stocks start to rally, we're seeing that zealous move to the upside. Okay, again, we've talked about this as well. This is an overnight. This is overnight, which I'm gonna write it wrong just so I can get it out. I've got a cramp coming on in my foot, and I just whacked my computer. Give me a second again here. Let me fix. All right, we got that fixed. Got all kinds of things going on today, but one thing about this overnight over here is that, or I should just circle it. I think that was overnight. It is a point that we are going to go up and print during the day session. But you can see with this chart today, not looking too great, especially if we ended up right here. Even the only way that make this really look great would be to really extend and come up and test this value area high here. But with that doji right there, tomorrow get some kind of confirmation, and we are going to make it look like we are going to come back down. If we get a doji like that, it's going to make it look like the market wants to come back down. At least test that 28.33 area, which is a major support and resistance. It's going to act as a support right now. It is a big time support. As you can see, it's happened several times in the past, maybe not so much there, but you can see when we got close, it started coming into fruition a little bit. But market's really driving all, rising tide lifts all ships. That's kind of what we're seeing across the board here too as well. All right, E-mini S&Ps, as you can see, are making new highs right now, up about 30 on the day. Overnight inventory gapped up. They covered the gap on the overnight session, but there was really no attempt to flush anything out here today. Just a straight up market rally. Most of this having to do with Trump saying that they've worked something out with Mexico. Now he's trying to get this figured out with China. So Mexico is a major driver of this market moving higher with the tariff situation. All right, some things that I've added to my portfolio today. We've got Visa here, and in Visa, I went into the July and bought the 165 puts in there. So as you can see here, I went in, did the July 165 puts that I paid $2.15 for. So I bought these. Looks like red. I bought the July 165 puts. This is just looking a little bit toppy. The Fed talking about lowering interest, or the market wanting to talk about lower interest rates should not be driving Visa higher. That they want to make money on higher interest rates. That gives them more of margin. They can gap it a little bit better when we see that. But this market has had a nice big move to the upside. It looks a little bit toppy. You can see with the 165 puts in there, the 165 puts in there, I'm only looking for a small move, maybe down to right around here. So just a little bit of a correction is all I'm looking for in this trade. That's why I bent the rules and did the July rather than going a little bit further out in duration. I know I'm in that theta contraction phase where we're going to see a lot of theta coming out of this, but I feel like this move is going to happen relatively quickly and I'm going to be able to get out of it. Now, a print, I'm going to be out above if it goes over 170. All right, that is going to be my out. I'm going to pull the trigger on this trade. Or if it gets to about $1.07 is going to be also my out as well. So out on a loser if it goes greater than 170 or $1.07 for my premium to be able to get out. Follow my rule there. I bent the rule a little bit on the timing of this all. All right, Kodak had a setup on Friday, couldn't make it back to the point of control. So a lot of times what we've talked about, we get this magnet up here and the market wants to come up to that area. But we see that we found this as resistance to the upside. It couldn't break through there and get back to the point of control. So that level is going to be something we're going to keep an eye on, looking for this to come back down and test the value area low. Again, did not go out in the further duration. I think these are going to be quicker moves, so I decided to get into the regular July. And in that July, I bought the 55 puts in there for $1.40. So I bought the July 55 puts for $1.40 on that. Yep, bought the July 55 puts for $1.40. So you can see, not looking for a major move. As a matter of fact, the market was trading right around there when I first got into it. Now these puts are looking pretty good. If I go over and look at my chart, I bought them for $1.40. Right now they're trading. They trade 155 right now. So that trade is looking pretty good. Last trade is 155 on that. Not trying to get you guys to jump off the cliff with me, but you can see this is one of those typical chart patterns that we talk about where you get a doji that looks like this, and then next day we get confirmation to the downside as soon as it breaks below and looks like it's going to settle down there. You get something like that on a chart. Anything like that is very bearish. That's a bearish setup for sure. And that's what we've got right there. Looks almost atypical. You'd love to see that at the top of move. That's much better indicator. But any type of move like that where we got that parabolic move to the upside, now we're starting to see this. That's just a bearish pattern that I couldn't pass up, to be quite honest. So bought those for $1.40. And then finally, the last thing that I've done today was take off some of my XRT. So remember this, we talked about on the retailers. The retailers, when I was talking just recently, we saw the tech sector driving down, but we were seeing the Dow Jones, some of the blue chips, E-mini S&Ps, the retail sector was actually driving higher. I said this is looking like a little bit of a sector rotation where people are pulling money out of some of those more volatile aspects of the equities, which is being the tech sector. And I thought that since retail had been so beat up that people were just going to start looking to park their money in something like that. We've gotten this move to the upside, so that worked. We've got our bullish assumption. Bullish assumption was what we were looking for there, and we got the vol to come out of it right here. So we got both things working in our favor. That volatility coming out, that really sucks out the premium. We've got the directional move as well. So all things coming together on this. And in XRT, if you guys remember, I had sold the July 39 puts in there for 80 cents. I was able to buy those back for 37 cents this morning. Those were the July 39 puts that I originally sold. I sold the July 39 puts for 80 cents, and then I got out at 37 cents, which is 50% of my max profit, which we talk about in all of our webinars. So I followed the rules on this one. That worked out. 50% of max profit got me out slightly better than what we were talking about. All of those things worked out for that trade. We wish all of them would work out that easily, but I'm not going to play around with this. We could easily see the retail sector start to fall apart as we're seeing the NASDAQ drive higher with most of these techs really making a big push today. All right, that's all I've got for you guys. Hope everybody had a great weekend. Check out the webinars. We're doing this. You come up with an assumption similar to this where we had XRT, and then we find the strategy that fits the environment around the underlying that we have an assumption in. So I'm going to show you all the strategies that fit with your assumption in this series. So check it out at protraderstrategies.com. Also, hey, go check out our Facebook page. We're really firing that thing up. We need some likes in there so you guys can see the daily market commentaries. We're throwing those out there. If you want it in a little bit more organized fashion, go to Pro Trader Strategies and sign up. But if you want to just check out some of the free content, we're throwing that out there on Facebook for you, all right? If you can't take that, take it easy.